So we went through some of the largest asset managers and their outlooks for 2026 in regards to equities, and want to give you some of what they're looking for in 2026 and how it can affect your portfolio. Obviously, take this with a pinch of salt because a lot of the times they are out and can be wrong. But broadly, what they're sensing is a positive outlook for equities. They do have some nuances where they think that the Europe, Asia in particular, may outgrow the US. They do think that the AI trade will still be a big deal in 2026, but they see it broadening out into different sectors, not just the big names. They say there's a lot of growth in Europe. A lot of analysts, Goldman Sachs, for example, head European analysis, has said there's more chance that European equities will go over 10%, but he thinks this will be eclipsed by the Asian equities that have more of a theme. Now, the elephant in the room is obviously the AI bubble in terms of the US tech, and for that matter in Asia as well, that is heavily reliant on AI. You look at stocks like Nvidia, it's trading on 43 times multiple, and you've got a lot of stocks in the AI bubble that have been hyped up based on non-fundamental earnings. Now, this can come to tuition if, for example, the capex keeps on going and the revenue is not. And also, as of what we've seen recently with Venezuela and Trump, they have geopolitical risks. The market at present has overlooked this, but it is just a theme that there is that geopolitical risk there. If we're going to look at more kind of geopolitical risk and what's happened recently in Venezuela, this particularly goes into the fact that it may affect China actually more with their loans into Venezuela and a lower oil price in the broader market. But overall, for equities, they're quite positive. From a portfolio standpoint, and what we're saying to investors is, okay, there is that element of optimism. If there isn't a black swan or the AI bubble doesn't burst, it does look quite optimistic for equities, but take that with some caution. Hedge your bets. Don't go just into the US markets. Broaden out, especially if you're just in a US tracker. It's heavily reliant on those few names. Look at other kind of regions, Europe, other sectors as well as more of a defensive play.